closing in on that 6,000 mark. But here's the weird part. Even with stocks breaking records, investors just aren't feeling it. In fact, this rally is being called the most hated in recent memory. So why all the caution while the market keeps climbing? It starts with sentiment. Yahoo Finance and Bank of America's latest surveys show that fund managers, hedge funds, even retail traders are keeping more cash on the sidelines than usual. Equity exposure is actually below long-term averages, and the percentage of bullish investors is way down from last year. People are making money, but they aren't exactly celebrating. Now let's talk context. Just a couple months ago, markets took a nosedive. Remember that April sell-off? The S&P 500 was down nearly 18% at one point, and the NASDAQ fell over 23% for the year. Since then, stocks have staged a furious comeback. The S&P 500 rallied 18% in just 25 days. But that kind of wild swing, it tends to make people nervous. And volatility like we saw in April when the VIX spiked to 60 doesn't fade from memory fast. There's also the big backdrop. Interest rates are near 2-decade highs. The Fed is holding off on cuts for now. And geopolitics, like the Israel-Iran conflict, still loom over everything. Plus, valuations are stretched. The S&P 500